This is Leading Detection, a Sedulo podcast where fraud fighters talk tech. Welcome back to the Leading Detection podcast. And today we're joined by Caldwell, and we're going to be talking about fraud from the middle, so a network's view of risk. Kyle, welcome and thank you for joining us.
Yeah, thanks for having me. It's been a long time coming, but happy to be here.
It has. We've had some busy calendars, some back and forth, but we've made it happen and we're here, which is the important thing. We're going to tap into your wealth of knowledge and an interesting perspective you've got when it comes to fraud prevention infrastructure effectively. So let's start real simple. If you can paint a picture for us, what does it mean for your team and what you do sat in the middle of all these payments?
Yeah. So for listeners, audience on the call, Clearinghouse operates some of the largest payment infrastructure within the United States. All in all, we operate about $2 trillion of transactions a day, which is absolutely massive. It's one of my things that I like to brag about when it comes to the clearinghouse and just the impact that we have across payments in the United States. It also is a little bit different than where I was used to fighting fraud. I was on the bank side for most of my career, and we had so many different data signals that we'd be able to identify fraud, up to the account opening, right? So the first connection to the bank through the onboarding process into the digital enrollment. Then we're talking physical, products like cards and checks, and even to payments. And I think I took for granted just how much information, is on the front side of the house, because in the middle, we get really the payment information. So this is the to and the from of the payment. And as you can likely imagine, there's a lot of rich detail in there, but it's all around settling the payment. And so we don't get a lot of those risk signals that are passed through us by our customers. We don't see a lot of the login activity. So it's really just about anomaly detection and understanding payments kind of going through and kind of aggregating to specific groups of payees. That's something that we can detect and identify as anomalous, but we're still not qualified to say that it's fraudulent. That's not, really our role within the ecosystem. So, and then subsequently, we don't see a lot of the after effect either, right? So the payment gets, goes through, it gets settled. It gets identified as fraud. There's a lot that goes into that post-settlement investigation. Reaching out to our customers, or to our clients reaching out to their customers, verifying the activity, updating their case file, maybe even submitting SARs. We don't see a lot of that as well. So it's really just the bridge, if you will, between the two organizations that we have observation and we can see and where we sit.
Yeah. So when it comes to fraud, you've been on the bank side previously. How's it been changing that way of thinking when you are now the bridge?
Yeah, it's been a mindset shift for sure. Now instead of identifying things as fraud, we identify them as anomalous. We can't necessarily qualify whether or not it's suspicious. For example, one of the other facts about the clearinghouse that I like to share is that we have about 73% penetration into all DDAs within North America, which is fantastic. So we can see if there's been, an account that's now receiving an influx of payments that has never been observed on the network, right? So that, I guess, could quantify or at least, be identified as, suspicious, but it's still not enough information to say that it's fraudulent or that there's something nefarious going on. So that's really, I think, where it's been the biggest opportunity for me is kind of just rephrasing and rethinking, how we communicate about, suspicious payments at the clearinghouse and really working with our customers and our clients to better understand what they need from us in order to be more confident that when they do make those assertions that they can have the necessary intelligence from us to do that.
So have you got more intelligence, more data, but less context? How does that all fit in?
That's probably fair to say. I don't know if we have more data about a particular end user, right? Or like a client or a customer, but we have definitely more like network level data, right? When you think about financial institutions and banks, they know their customer better than we do. Absolutely. They have all of the, the compliance checks that they need. They have, potential behavioral signals. They have even like different accounts, right? So, credit cards. So they know their customer through and through, but we have most certainly, more data in terms of the actual like what's going on in the network. And so we can see, a lot of the tos and a lot of the froms of these
Mm,
payments. But again, we don't necessarily know if that is suspicious because we don't see, how that payment was ultimately initiated, right? So it's not the
yeah.
payment in and of itself that was fraudulent. It was the login, that was compromised. It was the account
Mm.
that was taken over. We don't know that, right? We just see that this payment that was initiated was eventually, tied to fraud, but it's generally upstream than the actual payment being initiated.
So, what can you see? What supplements their kind of fraud investigations that they wouldn't have without you, effectively?
Yeah. So, we're thinking about how we can, be there for our clients before those payments are ultimately
Hmm.
initiated, right? So one of the things that is scary for I think a lot of clients, especially as they get into instant payments, is the instant settlement or, the fact that the payment isn't irrevocable. One of
Yeah.
the things that that is by design. It's an actual strong value proposition of instant payments. But I think that that's been flipped almost and you hear this, faster payments equals faster fraud. Well,
Yeah.
it's not necessarily true, right? The fraud occurs, upstream and the how fast the payment settles does not mean that that the fraud is faster. It's just that, the fraudster is getting the money, faster, but the fraud actually occurred, well before that payment was ever submitted. So what this means to us is that we have to think about and modernize the way that we're informing our clients about the suspicious nature of the activity. They don't know what they can't see. And we can
Hmm.
see ultimately where those funds are going to, right? So it's, think about it in terms of risk insights, very similar to, other networks, and ultimately being utilizing that information in a varying capacity to inform risk-based decisions within those policy managers. So,
Mm.
whereas you might not be able to know for 100% certain, whether or not a payment that's going to another participant is, fraudulent, we'd be able to tell you, hey, there was an influx of payments over, 5, 7 days, whatever that time period is. For what it's worth, you may assume that since this is the only one that you have sent to this end receiver,
Yeah.
you might think that it's, fine, but you might think that it's less fine, for lack of a better phrase, if you knew that they've received 100 payments in that same period of time. And
Mm.
so we're looking at it at a more network macro level, and that's what we're looking to return back to our clients so that way they know, about that finality.
But with faster payments, faster fraud, people think of that buffer and the time to kind of see all this information. Can action be made in that buffer, or does it not make a difference if that is
Yeah, I mean,
removed?
I think people have like that safety blanket around like
Mm.
that buffer of like the more core, payment, utilities or rails like, ACH. There I think there is a level of comfort that in the event that the payment goes out, you have, until that payment settles, which is slower to either
Yeah.
recover, you can reach out to the bank, submit a hold harmless, try to recuperate those funds, whatever that case is. So
Hmm.
I think that that's almost like a, um, like kind of like a comfort blanket that, oh, well, we can still send this payment. Recovery is a lot easier. I still think that instant payments, especially here in the United States, is still kind of maturing in that respect, right? Like a little known fact about instant payments is that, there is a request for refund process that you can send with indemnity, and that
Okay.
identity is built within the settlement message, right? And so you no longer have to send hold harmlesses via email. You no longer have to try to fax them, right? It's all within the settlement message, and it follows along the original payment. So in a way,
Hmm.
that's a lot more efficient. I think that what we end up doing is that we're taking, older fraud prevention best practices and then applying them to the new rails. And then,
Hmm.
of course, there's going to be gaps. And I think that that makes a lot of people uncomfortable as opposed to looking at, like the instant payment networks holistically and thinking about the best approach to mitigate fraud.
If we pull that blanket tomorrow and we all went instant payments, would there be what issues would that create?
Uh, yeah, I mean, I think it's definitely something that if you're talking about tomorrow, right? So if we're tactically, what is that? April 20th.
Yeah.
I I think that there is a concern around the fact that a lot of fraud controls are not thinking about it pre-transaction. A lot of it is
Hmm.
still post-transaction. So, payments, for these older channels get pushed up into the batch windows. Right before the batch windows, they get risk scored, right? And then
Hmm.
if you don't meet that SLA, the payment goes out, but you still have that chance to review it and try to recover. As
Hmm.
soon as, in RTP and instant payments, as soon as that payment is pushed to the network, it settles within, 15 seconds. So that's probably
Mm.
the biggest learning gap, is getting comfortable with preventing fraud before, the customer actually submits it and gets that confirmation. It
Mm.
is a mindset shift. It is a mindset change for a lot of organizations, but it's also how a lot of the more global instant payment networks are also modernizing their fraud requirement, or their fraud best practices. It's, think about, all the benefits of stopping the fraud before it actually enters the network. There's lower recovery cost. There's lower impact, to the customer. Sure, you might have to call and just, walk them through, what happened. But nowadays, especially with how scams have modernized,
Yeah.
customers are starting to appreciate that, that perspective of, hey, this bank, this organization has my back. I understand that payment did not go through, but they gave me a description as to why. And, I appreciate that. Right. And so, again, I think if we're talking about turning on instant payments tomorrow and there's no more legacy, or I can't say legacy, there's no more core product,
Mm.
services, I do think that it's a learning opportunity, but I think that a large group of the world is already benefiting from instant payments, and clients want their money much faster, and, again, to be guaranteed, as opposed to the open-endedness of other payment rails.
Yeah, I think we're all just becoming more impatient, right? And you mentioned that slow doesn't necessarily automatically mean safe. I mean, checks, they're pretty much as slow as it gets, but they're blowing up right now.
Yeah, I mean, imagine, this is this is what I try to tell my parents whenever they wanna mail me a check. Like, would you put cash in an envelope and then just, like, let it go unprotected in the mail, right? Like, that's effectively a check in a way, right? And I also have to be very mindful,
Mm.
when we discuss this, right? Because, checks do have a lot of benefits. A lot of people, rely on checks. Checks are used quite a bit today, right? But it also, it's one of those payment mechanisms that, does create a lot of risks. Like, if you're on LinkedIn and specifically in the fraud prevention space, you can see, if you follow, some of the U.S. postal inspectors
Yeah.
post of just mailboxes getting broken in, or you can see, like, hey, this is what recruitment looks like, where, there's internal, insiders into some of these facilities, and they just are loading up the mail, right, if they identify
Mm.
that there's a check in it. So it is, again, slower doesn't mean, safer in this context, and, specifically in check, it is, something that's top of mind for a lot of professionals. Even when you see that check usage is going down, the fraud is remaining, pretty consistent, if not growing.
And I mean, you see on some of the letters, right? It says private and confidential on it as well. So there's indicators on there for these fraudsters, and you're seeing them just filling up cars of boxes and boxes of like you're gonna find a check in there somewhere, right?
Yeah, I mean, it's definitely something that, even I think the Fed put out an RFI around, like, their position on checks. Again, I think that it is something that the market is responding to. You go to any conference now, the running joke is there's probably a session on how risky checks are, how risky instant payments is, how risky ACH is, right? Like, payments in and of itself are just, I think, of course, risky, but at the end of the day, um, and, at the end of the day, clients need to move money, right? It's a
Mm.
fact. This is how the economy works. And, it's just, making sure that we're putting in, and, the right controls, as well as helping our clients understand, just information about the network that they otherwise wouldn't see, is something that, again, we're trying to make sure that our clients feel as comfortable as possible when they're ultimately submitting those payments.
So, what does, as inevitably we move more to real time payments, what does a strong setup look like for a bank if they do want to move fast but stay safe?
Yeah, I mean, I think, the first thing is that you'll hear quite a lot is understand your data, the
Hmm.
data that you have access to today. There's probably data that you're not using that you could be using. One of the things that I often point towards is the interactive, voice response system, or the IVR. Fraudsters
Hmm.
love things that don't actually have controls and provide them information. So think about When you're going through the IVR and you're selecting these different options, think about how, if you're KBA for knowledge-based authentication questions, if you rely on those, how some of those details that can be provided in that IVR can then subsequently be used to authenticate as, the person that's pretending to be, your customer, right? It's one thing, right? And then also utilizing those signals when there is a suspicious payment. So you might know, for example, that this phone number that has now been updated, onto the customer's profile was first observed within the IVR, has no other connections, a weird area code, and is now trying to submit a payment for $500,000, right? That's pretty good risk indicator.
Hmm.
And start thinking about your customer just as, some of the experienced teams across these banks and organizations are thinking about the customer in a 360 view. Think about the customer from a fraud perspective in that 360 view. If they're
Mm.
constantly using their card, perhaps a real-time payment is net new to them, right? Like that would be something that would be worth an extra look. And subsequently, if they never use a card, but now they just ordered one, probably something that's worth a look. And all of this kind of leads up into that payment point that I touched
Mm.
on earlier. There's a lot of signals that occur prior to that payment. But once it hits that payment, we're enabling pre-transactional insights for that receiving account. There's a lot of similar models out there. There's also different models, right? So we're talking about payment and volume and value over time, as well as just ratio of payments. We're also providing some suspected and confirmed fraud indicators. And again, this is just at a high level that can be returned back to our clients, and they can determine whether or not they want to make a payment to that institution. But there's also other models out there globally, confirmation of payee or verification of payee. So making sure that the name is tied to the account is definitely another good indicator, depending upon where you are. And
Hmm.
then think about like the post transaction, right? So the payment went out, but has the customer called back in to verify it? If they were calling in 40 times and now they're not calling at all, maybe that's an indicator. And start thinking about how you can collaborate with, cross FI. We often hear that, data sharing is key and is an initiative that I know within the United States would definitely love to be, picked up and kind of
Mm.
expanded upon. But, that doesn't mean that you can't build out the relationships that you need now to help prevent the fraud in the future. So kind of a full end to end, review of what a quote unquote good system or a best system might look like. But
So it's a lot of data. It's a lot of signals. It's growing, right? How do we just have to accept that, and then we have to just keep looking at new areas and growing our kind of the information we receive, or is
yeah,
there
I think
another way?
I yeah, and it's hard. One of the things that you might hear is, or someone might say, is that this is where AI can likely help, right? Is
Hmm.
find the needle in the haystack. One of the things that I would reinforce is almost, go back to the basics. Is I do think is providing definitely some value in this space, but AI is only as good as the data that is enabling it. And that's
Hmm.
just something to kind of reinforce, right? If your data is mismatched or if it's not connected, you're gonna get, results that don't necessarily have anything to do with what you're trying to look at. So to your point, with so much data out there, it's really just, understanding, okay, yes, this was suspicious. Why was it suspicious? And almost doing those retroactive or, retrospectives of the payment and making sure that you're kind of looking through if it did inevitably go through, what could have fired, and then slowly adding on, from there, right? So if you have all of the data in the world, and that was often one of the things that I would get asked from a technology perspective is, like if we're thinking about it iteratively, what
Yeah.
data do you need to prevent fraud? My response was always all of it, right? Because I don't know, you never know if that column that's like XYZ49, which is at the tail end of an Excel sheet. You never
Mm.
know if that's going to be the one indicator that you need to stop the most prevalent fraud, but it is good to have it. It's good to understand it. To your point, there's a lot of it, but that's, sometimes part of the fun is to find the needle in the haystack.
Could it be, especially for business owners, is it worth it? So more tools, more data, more talent, because fraud numbers are going down, right? I mean, the amount is going up. So is it worth it for everyone to do all of this?
Yeah, I mean, I think it is. As soon as we stop pushing forward,
Hmm.
the fraudsters will figure that out and find the gap. I mean, some of it, of course, is you have to be very mindful with how we position spending in this space. A lot of times it is, typically reactive or like a loss reduction, like
Hmm.
effectively a cost center. but it can be just as more importantly a customer enabler or a sale and like a growth enabler.
Hmm.
And I think that that's important. The other thing to call out too is, constantly look at your signals, as well as like your fraud policies. If, we feel like fraud is going down, I would typically look at that, when I was in this, when I was on the fraud strategy side, is
Yeah.
I'm missing something, right? And so something to kind of keep in mind is just constantly run your false positives, understand, what the data is telling you. Look at
Hmm.
your customer and your dispute mechanisms to make sure that there's nothing that's kind of flipping underneath the scenes. But ultimately, to your point, it's just understanding the value of that investment.
And what's your thoughts on kind of regulation stepping in here as well to try and force the hand?
Yeah, I mean, I think banks should look to solve it, without regulation. As soon as you start to have regulation, then it becomes very prescriptive. And
Hmm.
sometimes it's not as proactive as what, you're finding, right? Because if, depending on the regulation, you might then have to be in compliant. You can then deprioritize things that actually have meaning to you or your business in
Hmm.
favor of something that the greater market is seeing. And while that could make sense, it could also not make sense, right? Because you're not necessarily dealing with it now. So I think we have to be very proactive, and very mindful. Hopefully, we can all reach a happy middle ground and not require that.
Yeah.
On the other side of it, it would be, great, because I'm sure some organizations are struggling to get the financing that they need to feel like they're all well and good, right? Or that they're meeting the
Hmm.
compliance. So I mean, again, I would like to see us come together and solve this problem together. But it's again, I think it's about where you're positioned in the market and what you ultimately need to serve your clients.
Yeah. So if I was to ask you to put two different hats on, so one hat would be kind of an industry advisor. Where do you think that investment should be made when it comes to fraud? And then the second hat would be as a bank executive. Where should you invest?
Yeah. So the first hat and something honestly, maybe phrasing this a little differently, something that keeps me up at night, right? It's the amount of like knowledge, right? That's out
Mm,
there. Like there's so many systems now that have become antiquated that the way that the knowledge I think is progressed through organizations is often an area of opportunity. And what ends up happening is these services then look to become more modernized, and people that know how those services work are no longer with that organization, and it creates gaps, right? And so then when you're looking to build a new service on top of that, or replace a service, you might not functionally know how everything works. And now all of a sudden you have this gap that you had no idea ever existed is now impacting you. So that's something
mm,
that I would definitely look to prioritize. It's the people and the people component of these
yeah.
services that we often miss. And that's, I think, is a really big priority as a former practitioner, is
Mhm.
making sure that that information's out there and that everyone, again, knows the basics. From an executive standpoint, I would definitely continue to look at how can we enable, growth for whatever customers are want to do, right? Like that's always my perspective is once you're in the castle walls, you should
Yeah.
be able to do whatever it is the client wants to do. But what ends up happening is there's investment that is often deprioritized or prioritized later after a new service has been delivered,
Mhm.
that then kind of puts a bad taste in everyone's mouth, right? Like we need to be very mindful that when a service is delivered, that it has all of the appropriate controls that it needs to really enable that full experience. Because it only takes, one poor reputational impact to kind of spoil it. And then all of a sudden you're looking for something else. So, if you're going to invest the money and the time to deliver really cool experiences, think about it, end to end, including, how do we, prevent bad actors from ruining these experiences for our clients. And that's something that I would definitely encourage to kind of shift that mindset on, because while it is, agile, right? Agile effectively means a full-fledged product, even though it's,
Mm.
minimal, the fraud controls should be tied along with that.
So fraud should be much more involved in the product launches, product roadmaps, especially with banks and FIs.
Yeah, you got it. It's typically, we want to make sure, and I think that historically, fraud has oh man, they're just going to stop me from doing cool stuff, right? But it's also one of those things that we typically are brought in at the last moment. And so
Mm.
we're like, oh my gosh, this is going to create so much risk. If we're brought in early, I can guarantee you that we'll be able to enable so many more cool things by also helping to protect the true customer and that experience and leading to more positive outcomes.
And for the future of payments, future of payment fraud, where do you see the fraud risk shifting in the near
Yeah,
future?
I think payments are definitely going to become faster. We're seeing great adoption with real-time payment and instant payments. You can see it, globally. There's a lot of use cases. I do think that along with that, fraud prevention technology also needs to shift faster. This includes from prevention, but also detection and then recovery. So I think that again, like that's where I see the market moving. There's especially now with just how much technology has been ingrained, like
Yeah.
into just the world. We're getting used to things being delivered very quickly, right? Like you order something on Amazon now and you're mad if it's not there to you by the end of the week, right? Like just
Mm.
think about that. So it's every aspect of our lives. Yes, I think that it does inherently create more risk, but I think that risk is mitigated primarily because of, again, a lot of the controls that we've enabled, as well as some of these services that are also coming to market. So I think it's, instead of being a blocker in this case, reach out and learn how some of these services may help to enable those experiences that, would otherwise be scary.
Yeah. When we're thinking about this, it might be a little bit scary. What would be like the first steps you'd suggest?
Yeah, I mean, I think the first thing is, definitely reach out to, your payments people. If you're at a bank, reach out to your payments experts. Really understand, their goals. Understanding, the why is so important. When then you have the context to understand, okay, how can we enable this? From there, look into the rules, of these different networks, right? There's a lot of them. It could definitely be a pretty long read, but it gives you a lot of insights, right? Like that was the first thing when I joined the clearinghouse. I read the RTP, operating manual. A lot of that has
Mm.
nothing to do with fraud, but just even understanding how
Yeah.
the money flows in and out will give you a better sense of how you can control, the risky money movement. From there, we, especially here at the clearinghouse, as well as I know instant payment networks across the globe, have experts that can help you feel comfortable. We're here to help. We want to make sure that as you guys enable these services, that we're there to kind of walk through what's available today, what's available tomorrow, and
Mm.
ultimately, if there is something that you need, work to put in our backlog, so that way we can make sure that the payment is being sent both efficiently, fast, but safely as well.
Yeah. Well, Carl, it's been an absolute pleasure tapping into your unique perspective today. Before we leave, if you could kind of inform fraud leaders, product teams, or what you wish they understood more about payment infrastructure, what would that be? What would you leave us with?
I would say that I understand that it's dense. I live that world. Just start, small. Reach out again to myself. If you'd like more information, I'm committed to helping other fraud leaders understand payments. It's one of the reasons why I joined the clearinghouse. Tremendous impact to be able to have that, but also just, better understand the use cases in which your customers want to operate. So
Mm.
often we end up seeing, almost like the fraud use cases, if you will, maybe like, I've coined like things that fraudsters want to do.
Yeah.
We don't always understand the things that our true customers want to do. And sometimes that context is very important when you work to then understand how you can control the bad stuff. And you can tell
Mm.
that I'm in New York City
Yeah.
because the fire trucks are going off. But yeah, it was a pleasure and I really appreciate it, Matt.
So it has been an absolute pleasure. And if people want to hear more about what you're working on, want to reach out, or even what you've got coming up this year, where can they find you? Or what have you got coming up as well?
Yeah, I mean, I'm at various conferences within New York City. There's also a conference that our Clearinghouse Payments Authority host in May called Concepts. It's our 30th conference
Yeah,
for that particular venue, so that's awesome. You can also reach me on LinkedIn. My email is super complicated. If anyone wants to follow up with me on email, it's my first dot last name at theclearinghouse.org. But again, we're here for you. Let us know how we can help. And Matt, thanks for bringing me on and giving us the platform to kind of talk through it a little bit more.
absolutely. And hopefully it does ignite a bit of conversation, both product and fraud leaders. Carl, it's been an absolute pleasure. Thank you for joining.
Yeah, I appreciate it.
Awesome. And to the listeners, until next time, ciao for now. Want to hear more about fighting fraud with tech? Subscribe to Leading Detection wherever you get your podcasts.